So Chris, welcome back to WealthTalk.
Nice to see you again, Christian.
Yes.
Thanks for inviting me back. I really appreciate that.
Our listeners who will remember, I'm sure, back in episode 18 when you were a guest and we were talking about SaaS pensions in that episode. And actually it ties in with what we're talking about today because the SaaS pension actually allowed you to get into business that you're in today, didn't it, Chris?
Certainly does. I'm a massive fan of SaaS pensions. It's been a game changer for us. I think the link with today is that the SaaS pension allowed us to invest in a franchise. Interesting that you can use your pension money to invest in a franchise. It's an intangible asset, but it can be done with a loan back. So we bought the franchise for Action Coach, which I'm heavily involved in using the SaaS, and a very tax efficient way to do it and a very cash efficient way of doing it.
Indeed. Now, a couple of weeks ago, we had Richard Perry, who's a fellow WealthBuilders member, also an action coach. And Richard was talking us through the 8 drivers, the value builder system there. And today we're looking at another way for business owners really to get a grip on the figures and the important things that matter in their business. Would you like to explain a little bit more about that, Chris?
Yeah, I'm going to give some context first, Christian, I think, around marketing. And it's interesting because as an accountant, having come from a bank, accountants generally have a different view of marketing. And the tool I'm going to share with you is very much a tool for making the best of your marketing. So I think just a few observations before we step into it. As an accountant, we were always taught that marketing was an expense, not an investment. And if I think about my time at the bank, the marketing budget was the first one to go. That was the first one to go when there was a cost-cutting exercise, very short-term view. But my view now, and I think if it's handled well, is that marketing has to be an investment and is an investment if it's handled properly. So I think that's the first concept to get across. If it's measured, if it's handled well, marketing is an investment, not an expense. I think the other thing that's important is, and I'll talk a lot about this, is measuring. Again, I'm an accountant, so I do like numbers, but my experience is that a lot of clients don't measure enough in their business, not even their profit. Often we'll talk to a prospect or a client and ask them what their turnover is or what the profit is, and it's a number they find out at the end of the year. So it really is important that we start measuring things in the business. And what I'm going to talk about today is a tool that's going to lift the bonnet on some of the metrics in the business. And then you can start to play tunes on them. So measuring is another key important part of the message of this session. The other thing for me is that marketing, what we're in business of is actually acquiring customers. We're actually buying customers. And Brad Sugars, who's, I suppose, our mentor, our coach, an action coach, has written a book on that, buying customers. What we're doing is we're actually spending money to acquire customers. But again, to do that, you've got to know your numbers. You've got to know how much it costs you to acquire a customer. So you spend £1,000 on a marketing campaign, you get 10 customers, your acquisition cost is £100. That's an important number because you need to benchmark that against the return you're getting back from the customer. And again, the metric there is lifetime value. How much does a customer generate for you in their lifetime in terms of revenue and profit? And then you can benchmark the cost against their lifetime value. So there's a few concepts that underpin marketing that I think are just worth kind of reinforcing before we step into 5 ways. Okay. So if I just go into 5 ways, this is probably the most valuable. I've been with Action Coach for six and a half years now. It's the one tool that we share with our clients that just completely blows the mind. And as I say, what it's doing is lifting the bonnet on some of the numbers. Now, my experience is that most clients will generally know or have a view on 3 key numbers in the business. They'll have a view on how many customers they've got. Not always, but they can have a reasonable guess how many customers they've got. They'll generally know their revenue, and they'll generally know their profit. They're the 3 numbers that they know. And if we ask them the question, they can at least have a guess at what those numbers might be. So often the case that they don't know their numbers, but generally they'll have a guess at it. So they're key numbers. And I think, Christian, we're going to attach some documentation to this session, which will help you calculate your own numbers. But the customers, the revenue, and the profit, they're outcomes. They're not numbers that you can easily influence. And the idea of what we call the 5 ways is there are 5 levers you can pull or you can play tunes on that can influence those numbers. So let's just start with customers. Where do we start? How do we get customers? We get customers by marketing and by generating leads. So at the top of the hopper in a business, if you like, is lead generation. We're acquiring leads. And for me, a lead is somebody who's expressed an interest in your product or your service, or somebody who's made contact with you, as opposed to a prospect who's somebody that you may want to do business with, but they haven't at this particular point made contact. So let's get the definition of a lead. There are various definitions, but that's one worth hanging our hat on. Somebody who's made contact, somebody who's registered in your website, somebody who's been to one of your seminars, somebody who's kind of interacted with you. Again, we've got to start measuring that number either on a weekly basis or on a monthly basis. Often clients don't measure. They haven't a clue how many leads they're getting. They don't know where the leads are coming from. So again, the more granularity we've got around the leads number, the better. But suffice it to say, let's start measuring that at a high level. And again, I would encourage anybody listening to this, let's start measuring the leads, okay? So leads at the top of the process, okay? And there are the important thing here is there are various ways of attracting leads, and I'm not going to go into all the strategies, but for example, as coaches, we use seminars as a way of generating leads. We'll give value in a seminar, attract people into the seminar. That's an opportunity for us to kind of capture information on the people in the room, and they are leads for us as business coaches. So various ways of doing that. Another way you can do it are using alliances. So look for an organisation that has got a similar customer base to you. I mean, again, as coaches, accountants are quite good for us to have an alliance with. An alliance is where we're working together. We're not competing in terms of the products that we offer. What we're doing is we're providing a service to a group of customers, and we can kind of collaborate with accountants and work with them on seminars or generating kind of business that's of mutual benefit to our clients and to us as collaborating parties. So let's leads. Let's get them measured. Let's understand where they're coming from. Great question for a customer when they ring up or when you speak to them. It's important to know how did you find out about us. Then you start to get an indication about which parts of your marketing is working. All right, so we've got the leads, and the next part of the calculation, the next part of the 5 ways is conversion. Okay, so how many of these leads are we converting into customers? Again, quite interesting when you ask a prospect or a client, what's your conversion rate? Often, I don't know what you know by conversion rate, but I'll have a guess at it. They'll have a guess at it, and invariably, their guess is massively out. Once you start to test it, they over exaggerate their conversion rate. So the conversion rate is how many customers have we converted from leads? Sorry, how many prospect leads have we converted into customers? So we've got 100 leads, 25 converted customers, conversion rate 25%. A really important number. And anything as low as kind of 20-25%, depending on the industry, gives us the opportunity as coaches to start to do some work with the clients to move that number up. Okay, so there's no point generating leads and losing them. Let's get them converted into customers. Various ways of improving conversion. Again, I think, Christine, we've got a roadmap that's going to give some more strategies, but one of the most uncomfortable ways of improving your conversion rate is by listening to the sales calls. Very, very uncomfortable as a coach to have somebody listen to your sales calls, and it's a discipline worth having, I think. So any business that's in sales, let's start listening to the calls. Let's start recording them, and let's start benchmarking those that are good at conversions, those that have got a high conversion rate, those that are not so good, and then we can get best practice into play in the business. Again, sales scripts, that's another great way of improving conversion rate, rather than just having a kind of free format conversation. So conversion rate's an important number. So having got leads and having got conversion rates, we've got to a base level number of customers. Okay. Obviously, customers generate revenue. So the next part of the 5 ways is to get to revenue. So the 2 elements that we're looking at here are what's the average sale? What's the average amount that a customer pays you on each transaction? Again, often a number not measured or not known by clients. Once we know it, we can start to improve it. Again, various ways of doing that. One of the first questions we ask our clients is, when was the last time you put your prices up? And often they haven't for quite a number of years because they don't like doing it, because they're worried about losing customers. But it's, their costs are going up. So let's really challenge whether we should be putting our prices up. Okay. Another interesting way of looking at the average transaction value, and McDonald's do it really well. It's a well-quoted example. Is cross-sell or upsell? Mm-hmm. Do you want fries with it? It's the classic example. And what's the equivalent in your business of the McDonald's? Do you want fries with it? A really great tool, if people want to just map this out in the mind or draw it out as you're listening to this, is draw out a matrix with at the top your products, product 1, 2, 3, 4, 5, and then down the left-hand side of the matrix, the customers or your key customers, and then cross off where each customer has got the relevant product, Okay, I don't know whether that makes sense, but you're starting to get a roadmap of which of your customers have not got products that you could potentially sell to them. Okay, so again, by being aware of that, when you're having a conversation with them, you can start to move them through and increase the average sales value just by saying, do you realise we've got this, and you've not engaged with that particular product. So really useful tool. It's a roadmap that will kind of serve you well in your business. Okay, so average sales value. There's loads of ways of increasing it. But it's a key part of getting to revenue. And then we're into, so how many times do your customers do business with you? Numbers of transactions. Again, best example here is, or one example is restaurants. If somebody comes to a restaurant for a meal, you want them to come back. Okay, so we should be measuring how many times do customers come back, repeat business. It's an important metric. It's one that needs to be measured. Not always easy to capture, but it's one that we do need to capture and encourage them to come back. If they're not coming back, there's a problem with either food or the service. So it's telling you a story about your business. I love the example of the florist who sends an invite to the husband. Sends a reminder to the husband that it's his anniversary in a week's time. How amazing is that? You know, I could really use that myself, I must admit. But that's clever. They've got a database of customers. They're interacting with the customers. And again, a key part of this is, have you got a database? Have you got information on your customers? Then you can start to interact with them. But simple examples there that work well. So having got numbers of customers, having got the average sales value, having got the numbers of transactions that we're seeing from our customers, we can start to kind of use the maths to get to revenue. So we're on the first line of the profit and loss account. Just merely by knowing that, you can start to play tunes on the metrics. And then the final piece is, having got revenue, what's our margin? Now that can be either gross margin or net margin. It depends what you want to monitor. But whatever the margin is, it needs to be measured and captured. And again, incredible how many businesses don't necessarily know their margins. Really useful to know which products generate which, the proportion of your profit. The old 80-20 rule often features. Often it's 80% of the profit comes from 20% of the customers. You should know those customers. You should know those 20% that are giving you the best profit, and then you can start to kind of drive the growth up in your business. Okay, so margins, again, many strategies to impact on margins. Certainly measuring it is a start. And what I find is it's interesting how just by measuring it, the numbers improve. It's incredible. Quite odd that, isn't it, how just by measuring, because it's in your line of sight. But just measuring some of this stuff will make a big impact. Certainly looking at costs. I mean, one of the first things we would do with a client is give them the 10% cost challenge. Go and speak to your accountant or your bookkeeper and get them to tell you how they can shave 10% off the cost base. Then you start to kind of look at opportunities to reduce the costs and therefore improve the margin. Just while we're on margins, again, it's interesting how people don't appreciate the impact of increasing prices or reducing prices and discounting. Certainly for us, discounting is a dirty word. If you've got a 10% profit margin and you're taking 5% off your prices, what's happening to your profit? It's halving. Again, just hang on to the concept of that, because what that means is you've got to do another kind of slice of work to actually recover the kind of profit margin. You've got and it's an important metric to understand that. By the same token, increasing by 5% has a massive impact on your bottom line profit. So knowing the numbers, and the 5 ways is all about knowing the numbers. Okay, so having got the kind of base level, then it's what are you going to do to move the numbers forward. And one of the things that is worth doing is just have a look at what the impact of a 10% increase might be on each of the 5 drivers I've just described to you. So a 10% increase in leads, conversion, average fee, transaction value, and margin. The effect of that and the maths of that, because of the compounding, is that if you're increasing each by 10%, the bottom line impact is, it's not 10%, which most people would think it's not, because there's a compounding impact of the 10%, 64%. So just by seeing those numbers, you can start to see the power of this. This is leverage at its best. Divide to multiply, breaking things down and working on the component parts, and that's 5 ways.
That is fantastic. Thank you so much for sharing that, Chris. And as you mentioned earlier on there, you have created a document which we're going to link to in the show notes for anyone listening to download, and they can go through and list where your current number of leads, conversion rates, number of customers, all of the current figures, and then, as you say, work out what that 10% increase is. So I'll link to that in the show notes, and if anyone would like to get in touch with you, to ask any more questions, what would be the best way for them to do that, Chris?
I've got a website which is chrishenry@actioncoach.co.uk. So that's my website. Or my mobile number is absolutely fine. I don't mind giving that out. If you want me to shout it out, Christian, yeah.
Well, I can share that. Yeah.
It's fine. Okay. Either way. Obviously there are other coaches in the group as well. So we all work as a team. So. I think that's just important to be mindful of as well, I think. Yeah.
Excellent. Well, Chris, thank you so much for sharing that with us today.
No problem. Anytime, Christine. Good to see you.